Greetings, everybody. This is Jeff Scott. As you can see, it's 7/23/2017, 1:30 or so in the afternoon, and futures are not out yet. Welcome to this week's review. Monumental weekend for me. Three things happened that some thought never would happen. One, I had my 32nd anniversary with my lovely wife, and when you consider that I met her on a blind date and proposed 2 days later, I had no idea. I spent more time researching a stock than I did a wife. Second thing is I went out this morning with John and Mary Person, and I had my first golf game ever. That was pretty cool. And the third thing is after 20 years of beating my wife down with pleading and begging, she let me buy a boat. So this year has been a good year. Not only did I get a car from my winnings in the market or earnings in the market, I get to buy a boat too. So all good, great weekend. Hope you all are having a good weekend. I entitled today Summer Rally Extends for Growth. It hasn't been everything going up. It certainly this week was great for FANG. Look at Netflix on Friday. It's summertime. I've seen 3 weeks in a row of good returns on some growth stocks, so I called it a summer rally. Yet we also have dollar easing and bonds firming. There's the date. There's my email address. Any questions, comments, concerns, thoughts, please feel free to email me. Disclaimer, as always, this is education only. I am not a broker. I sell you nothing. I have nothing to sell you. I am independent. I've paid for the software that I use. Yes, I've developed friendship with certain vendors and gurus. And frankly, these programs started with me doing some unpaid volunteered education work for HGSI. So hence the email address. And trading involves risk. You and you alone are solely responsible for investment decisions you make. And yes, I will from time to time talk about options. And when I do, I highly recommend that you educate yourself first. Go to the Option Industry Council website, read their important books that describe the risk, and know what you're doing before you do it. I just want to call out that to remind people that there is a John Person live meeting Thursday, Friday, and Saturday, November 30th through December 2nd. It sort of, for me, became a free weekend because it's in between Christmas and what I normally have the first weekend of the year in December, which is it's called ASH, which is the big hematology meetings. But because it usually starts sometime around the 6th or 7th, that's the second week, so I'll be able to attend this. I am going to have a one-day meeting on Sunday, and more to follow in the next slide. It'll be in Palm Beach Gardens, Florida. That means you fly into PBI, and the meeting is at the Palm Beach Garden Hilton. For information about John's meeting, there's a phone number, his email, and his website. If you reach out to them, please tell them that you heard about them from me, and would love to see you there. And then my meeting, if you have interest, there's my email address. So what is my meeting going to be? I title a lot of my things the Be Your Own Guru program. And by that, I mean, I've learned from lots of intelligent people, from Ian Woodward, Ron Brown, John Person, Alexander Elder, a lot of smart people. Now, everybody does things their own way, and I suggest you do your things your own way. And I put together the best of what I thought, and I came up with my own style. And, there have been questions, does it work? Do I make any money? I'm up over 7 figures this year on my personal traded account. I showed it to you in January when I think I was up 400. It was absurd, January, February. But that account is now up 48% year to date. That's not annualized. Annualized probably be about 90%. It's been a fantastic year. And, I usually make money. This is a little bit above what I expect to make. And I trade using my learnings from Ian and John. And the key things about how I trade is I'm not tied to my computer during the day. It requires less than an hour each night. And I do this while working full-time building another multi-billion-dollar company. I love what I do with work, and I love what I do with my trading. And I had to find a way that I could do both. And the way that I trade, which is swing trading, allows me to not be glued to my computer. Topics, really HGS is taught to me by Ian. How I put this and John's stuff together to find my A trade. That's a term that Alexander Elder uses for finding your favorite trade. In my case, it's simple. It's pull back to support in an uptrend with momentum coming in. how I manage my trade, stops, position size, my favorite option plays to increase return. So you'll see this week that I had another 2% gain on my stocks, but that doesn't necessarily mean I had a 2% gain in my portfolio. I do a lot of options trades. So if I'm directionally long and I get a 2% move, I probably had a lot more than a 2% return. And then I will show you how I set up my scans in TradeStation and Thinkorswim, things that are not proprietary. I have a number of Thinkorswim scans and I have a number of TradeStation indicators and scans. I give those out to my attendees. They are not proprietary, which means I didn't pay for them and that I'm not breaking anybody's copyright law. And then I'll teach you how to put it all together. Housekeeping, it will be at the Palm Beach Gardens Hilton Garden Inn. My charge at this time is $400 to people attending John's meeting, $500 to others. I'm limiting it to 12 attendees. I say at this time, the cost will only go down if I have more attendees than I budget for. Since I do not want to make money doing this, it's all about breaking even. I pay enough taxes as it is. I will adjust the amount if I end up with more than I budgeted for. I will give you breakfast and lunch on Sunday. We'll get done by 5 o'clock for your flights home. And anybody that's going to John's meeting or in town in time for dinner Saturday who's attending my meeting, I will take you and a guest out to a dinner. And my dinners have been fairly legendary that I've gone out with on the night before, whether they're catered affairs on the water at my old condo. I've done a few at, what's it called, Capitol Grill. I learned not to leave an open bar next time, and learned that the hard way. And then you'll also get MP4 videos of the presentations and slides and PDFs. Sometimes the videos don't come out live, and I just redo them. You grab that, I'll be right back. Yeah, on your anniversary weekend, when your wife calls, you got to answer the phone. So I'd love to see you guys there. Look, I really like John and Mary a lot, and I get really excited when I introduce folks from my world, of the HGSI world, to the things that John does. And I make a lot of money using his material, and I can promise you that I'll continue to do these programs for some time and help you learn how to use the tools you pay for. Speaking of continuing to do the programs, I'm not planning on doing these in the next 2 weeks. I have a tendency of finding a way to do them, but I'll be traveling on both weekends, and I just don't know if I'll get time to do my prep work. Because it may take me an hour or less than an hour every night, but to do these presentations takes me a lot more. But I learn too. I call it be your own guru. Find influences that make a difference. To me, it started with canceling from O'Neill. Ian Woodward, may he rest in peace, really got me in the right and narrow, taught me how to make money, taught me how to do it consistently, taught me how not to give it back. And then George Roberts took Ian's work and canceled him and created highgrowthstock.com, which is not just for growth stocks, but is a great tool that implements a lot of Ian's work. Ron Brown, Ian's partner, Morales and Catcher are disciples of O'Neill, used to be money managers for O'Neill. They introduced us to pocket pivots and Bible gap ups. This is my buddy John. He was not my buddy in the beginning because I was like everybody else, a customer, not custard, that's ice cream, a customer and a student. I bought his indicators a long time ago for both TradeStation and Genesis, and read his books and walked into his office one day, and we've been friends ever since. He took me golfing today for the first time. So my condolences to John, because I have a feeling it's not a lot of fun taking somebody out for the first time and actually playing 18 holes. Van Tharp, position size and money management. A lot of the same principles that John uses, just a really big book talking about the same thing. My buddy George Lee, and then this is Guy Cohen, and I put him here for two reasons. He's got an interesting indicator that supposedly, because he doesn't tell you what's in it, measures institutional flow, called the OVI, and he has some great scanners between Option Easy and Flag Trader. And if you're new to options and you want to learn options, you're not going to learn them from me. And frankly, I don't think John's going to be doing a basic options program either, but Guy will. And so if you don't know options and you want to find a way to hypercharge your trading, I refer you to Guy Cohen. I have a lot of programs. I hide my desktop for a reason. give me TradeStation and Thinkorswim, Genesis if I'm lucky, and then for analysis, HGSI and EdgeRater. I do use seasonality to supplement and a number of websites. Here's the software, highgrowthstock.com. You'll notice a free 30-day trial, no credit card, and you'll also notice that there is a investing strategies. And if you click that and dial down, you'll see lots of programs that I've done in the past, as well as Ron Brown. Stock patterns are cyclical. Once again, I always start my weekend review by going, where do I think we are? You know, we're clearly have been in a very long bull run. So we're not at the beginning of a bull run. But the market keeps going higher. So it's almost, so we're somewhere up here at the left shoulder up here. No, I'm not talking left shoulder along the head and shoulders, but we're probably up here. And every time I think we're rolling over, we take another leg up. But these legs are not 6-month legs. They're usually a couple of weeks, and then we roll over. And just as I think the market's going to die, see a few Hindenburgs, we go up again. So that I don't see anything that's changed that. Yes, it's summertime. Yes, we're now through May, June, and almost through July. We are getting to the months where if we're going to get a big correction, we're going to see it then. Because the market changes and where we are in the cycle changes, I change my approach based upon where we are. So I'm still pretty in the market, although I've written a lot of calls out of the money on some of my high growth stocks. Some of them like Netflix and AAOI, I was able to sell calls like 195 on Netflix, 105 I think on AAOI as they were peaking, and getting $9-10 on those calls. Now what happens with that is, yes, if it keeps going up, I'll get called away, which is fine. I thought about selling it anyways. But on the other hand, if I pull back 3, 4, 5%, those calls will make up for what I lose. So that's just a way that I mitigate some of my risk. And then I also have the option of buying some puts, but I haven't done that yet because I didn't feel that the market was there. I will at some point, or I will close the positions. Sector review, a lot of green in utilities. Staples have some green. Other than that, it's mixed. Everything is mixed, except energy is kind of weak again, and finances are pretty much weak again as well. So I think I have a reason for that I'll show you. Major markets tell a story. So this is just 6 markets I look at every day: E-minis, NASDAQ futures, Dow futures. Down here is the IWM because the RTY, which is the new symbol in Thinkorswim for Russell futures, doesn't have enough history. Then you have the VIX and the dollar. This is a daily chart. The yellow is the 50-day moving average. All my indices are above the 50, at least the first 4. The green is the 17. All my indexes are above the 17. The 17 is above the 50, except I can't tell on the NASDAQ. I think it is, and the 50 is above the 200. So by my definition, we are in an uptrend in each market. We have a red candle on each of the Fridays. So an inside day for the most part. Is this the beginning of the end? We won't know until we see what it does this week. But we're starting to get extended off the moving averages, especially on the E-minis, the NASDAQ, and even the Russells have had a big move. The VIX seems to fail at this 50 moving, downtrending 50, and has been unable to break and close above it, and the dollar continues to fall. If I pull back and look at weekly charts, again, you see strong uptrends with weekly buy signals in all my indexes, the buy being the person buy signal, and the VIX and the dollar. Maybe the dollar pulls down to the 200 weekly or the 1,000 daily and bounces. We shall see this week. Again, looking at the same things another way in Genesis. Column-wise, we got the E-minis, the NASDAQ, the Russells, the NYSE, and the Dow. And, the worst looking one on the daily, which is the top row, is the NASDAQ, and it's certainly going up. On the weeklies, everything's in a buy signal, lower left, upper right, as they are on the monthlies. So it's hard for me to look at these charts and be bearish. Now, at some point, it'll be time to be bearish. Now, what do I think explains some of the weakness in the banks? Falling rates. And this is on the left, the 10-year, on the right, the 30-year. And for 2 weeks in a row, we've been down. So we ran up. We sort of failed at the line that I think is the line in the sand. And now we're in a new downtrend with lower highs and lower lows. As rates weaken, that's good for REITs, MLPs, usually utilities, dividends, and home builders. And I would say the MLPs were struggling this week, probably because energy was weak. And it's bad for banks, regionals, and insurers. AD lines continue to go higher. I can look at daily or weekly. I can put a lot more information on the screen instead of tightening it up. And I could tell you they're both pointing up to that low upper right-hand corner. So there's no divergence on the AD lines. If I look at breadth, the percentage of stocks above the 200-day moving average or above the 40, we're right in the middle, upper part of the middle, certainly not near the top. So we are strong but not overbought. 3-month new high, new low. Last week I said it was getting up to the point where I expected to pull back. We had some sideways movement on the S&P and we pulled back and we sort of off the overheated area, but we're still in the upper part. My summary thus far, strong market, no divergences, not an obvious overbought scenario. I look at the daily McClellan. I notice that the oscillator is above zero. The summation index is below, and it's sort of lower highs and higher lows. It'll be interesting to see how this resolves. Here's the weekly, looks the same. Looking at other breadth indicator, the buckets, 2/3 of the stocks, the S&P 1500 are above their midline of their Bollinger Band. That's bullish. Yet only about 9% of the stocks are above the Bollinger Bands. That's not enough for me to be concerned about. When I start to get 30% of stocks above or below the Bollinger Bands, I can almost assure you that within 2 trading days you will see a reversal. I look for a Hindenburg omen, which would signify that we've got a major correction on the horizon. The last we saw were in the middle of June, about a month ago, and we're now in a Hindi free zone on both the NASDAQ and the NYSE. Market tone, look at the third column. This is a Woody indicator, the percent B times the bandwidth. When it's green, it's time to buy. When it's yellow, it's chop. When it's red, it's sell. And we're in chop with the Russell and the NASDAQ, suggesting that you could be buying some. Clearly, this chop that we have, here is a lot more attractive than this chop was back here. So you can make money to the long side in this market, but it's not perfect, yet I see no obvious evidence that it's going to roll over. Sector strength improves, again, pretty choppy, but basic materials, technology, and utilities are green as well. So you've got strength in the several sectors, nothing is red. The canaries, Amazon, Baidu, Netflix, Priceline, Google, Facebook, the leaders of the market over the last several years, FANG Plus, and these are at a new closing high. We keep these because we expect the FANG stocks or other leaders to roll over in anticipation of a large market pullback. We are super strong. Even the bongo went green on the canaries. So canaries look great. And then I put together a list of 25 or so major leading stocks. This list was put together in June, I think about a month ago, maybe a little bit less than a month ago, with the idea that as long as the leaders continue to lead, this market goes higher. I look at this, I see consolidation the last 3 days. Everything's green above, a couple of pocket pivots, sitting right above the 8-day exponential moving average. If I had to say it's going higher or lower, I think it's going higher. And then know your news and earnings. So that this is the week for that, by the way. Although, where is my favorite Amazon? Must be sitting in front of my face that I don't see. But basically, here's the news from Bloomberg's economic calendar. As I look at it, we got a PMI flash on Monday, home sales. Tuesday, we got an FOMC meeting, Red Book, consumer confidence, Richmond Fed. Wednesday, mortgage apps, meeting announcement on Wednesday afternoon. I don't think anybody expects a rate change. I guess words always matter. Thursday, some jobless claims. And then on Friday, we've got GDP, sentiment, employment costs, and then we have the Baker Hughes rig count. I'm looking for Amazon because Amazon occurs this week too. It's probably right in front of my face. But I think there's a message here. This is a huge week for earnings, whether you're energy, technology, steel, industrials, biotech, drug companies, and social media. This is a busy, busy busy earnings week. And again, Amazon, I don't know where it's at, should be on this list as well. Market thoughts. It was a huge week. This is a huge week for EPS. Know your dates. Politics and news may drive markets. Healthcare will be in focus. Will they repeal, replace, or just repeal? My guess, they do nothing. I don't usually talk politics. Healthcare is my business. Obamacare has major issues, but Obamacare has done some things for all of us. Portability, the lack of pre-existing illnesses, the guaranteed insurance. Some of those things will be pretty tough to deal with by many if they go away. OPEC has a meeting, I think, today or tomorrow to review cuts, potential further tightening. Unfortunately for OPEC, we making a lot of shale oil, and they can't, despite their cuts, there's still an oversupply. Chips looking heavy, dividends look attractive, bonds, bond funds, REITs, dividend-paying stocks, utilities. Falling rates are bad for banks. There'll be some regional banks reporting this week. Biotech, to me, remains a bright spot while energy drops again. And healthcare, technology, and communications dominate my buy list. Here's our agenda. Now, I get a lot of questions about how do I manage all my different pieces of equipment? How do I look at stocks? How do I pick what I buy? Well, I look at two views on two of my monitors when I go through my list. HGSI, I've got them ranked here by a balance of technical and fundamentals. These are the stocks that made my screens. I look at their earnings to look at annual earnings for 17 and 18, also to see if there's any patterns identified in MarketSmith. I have a daily and a weekly chart, and this helps me. This is Zoetis. They are in the veterinary medicine space. Uptrend, pullback to the 50. Mobile breakout from a squeeze, a pocket pivot, and a kahuna. That is a Jeffrey stock that I like to buy. I love that pattern. I'm a little concerned that the earnings are not great in growth and that maybe we're fully priced. That said, I like this picture a lot. I also put the same stock into TradeStation, and in TradeStation, I can see that it's at a PPS sell signal. So I'm not yet necessarily on the weekly. It's in a daily. On a weekly, it's in a buy. OBV is strong on the daily and the weekly. It's in a squeeze that I could see here. So I look at this, and this is interesting to me. I've been playing around with a program called From Superior Profit and using some of their indicators, and it actually does a great job of painting trend lines. And the other problem I saw with this is it's sort of right at the vertex of a downtrend and an uptrending trend line. So I'm going to watch a break above this. I think would be very bullish, and I will putting a buy stop above that. Onto the charts, but those are the screens that you would see if you were in my office right now. And once again, I just want to call out John's meeting, my meeting. For more information, it's right here. Feel free to contact me with any questions about either program, and I would love to see you there. It's the only one I'm going to do this year. Now let's go into TradeStation, get a sense of the market. This is in Camden, Maine, where I took my first vacation this summer. I've got my next one coming up this coming week, so hence why I'm not promising any videos. Would that be a lovely place to retire to? Only in the spring and summer, not in the winter, I'm sure. All right, go back here. Come on. All right, so if you remember, I got a 5 or 6 point analysis, and I'm just right here. I'm looking at Amazon. Amazon has earnings coming out. I have a big position in Amazon, and I've got to decide whether I'm going to hold it into earnings, protect it, and puts are expensive. Amazon really looks heavy here, doesn't it? It's got MACD divergence. It's blue. MACD divergence on the weekly. It's at 84% on the high jump. I'll have to make a decision what I'm going to do. I'm not going to make that decision right now, but I have to watch it before earnings. E-minis. So let's look at what we got. Hello. I don't know why I just did that. All right, we're in a buy signal. Person buy daily, weekly, and monthly. We got a blue, green, and green. That's pretty damn good. It certainly is at the top of its channel, which is probably why it turned blue. The risk is a little bit higher there. The next thing I'm looking at is where does it sit within the auto envelope? And you can see within the auto envelope, it's up at the top. things have a tendency to go sideways there or move back in. So short term, perhaps overbought. I look for the high jump bar, which is at 70%, and the bongo is green. The only thing I see bothersome on the E-minis is it looks like it's tired. And it's also, I'd rather be buying it down here than buying it there. So seeing a pause here would not surprise me. If I look at the Dow futures, similar story, buy signals throughout, MACD divergence, although it's not at the top there, it's only at 49%, and the weekly bongo is green. A little bit weaker, but still looks relatively strong. NASDAQ futures, like the S&P, we're up at the top, actually above the upper limit of the auto envelope. We have buy signals throughout, blue on the daily, and we're at 78% on the high jump, so not doomsday. And notice that my weekly bongo turned green, daily, weekly, monthly. So the NASDAQ looks pretty good. The Russell also up right underneath the auto envelope, blue with MACD divergence and a daily, weekly, monthly buy, 45% in green on the bongo. So looking at those, I see a market that, it looks to me like it's closer to the top than the bottom of this swing, and that would have me concerned, but nothing's broken yet. Well, that's true. I could say that, and then I could show you the dollar. Something's broken. This is broken. Here's the dollar, and the dollar continues in a free fall. Notice the green dots here. These are MACD convergence. The problem is it goes on and on and on and on. It's just a signal. Be careful. So I'm down, 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 red, red, red. The dollar is just plain old weak, and it's at its 2-year low on the high jump. That means it is the highest below the sum of the price between the 250 and the 17 as it's been in 200 trading bars. The dollar's weak. Eventually, the dollar will bounce, but don't anticipate. Wait till it actually happens. Just be ready. The VIX, talking about a loser. The VIX is continues to fall, is in a down signal as well. And then you would think gold should be strong. It did have a strong Friday, and you could see gold is in an up move. Now, the issue for me is whether gold just stays in this sort of trading range here, or it actually breaks out and goes on to challenge old highs. It's in an uptrend right now. It's at 84% in the high jump bar. I'm gonna think about gold, whether or not I want to take a position. We'll talk more about it later. We go into HGSI. I'm not going to go through all 10 today because I want to show you a couple other tricks that I do. I'm going to go into designer. I'm going to go into user groups, Woodward and Brown, Major Markets Plus, hit warehouse. It'll open up right next to me. And I'm going to rank them by top down, which is just price and volume, heavily weighting one day. And I could see that gold has had a very positive move compared to the rest of the market, and that a lot of my indexes are up at the top. Oil, volatility, transport, gas, and now semis are at the bottom. I mentioned chips look heavy or weak. If I take a look at the S&P 500, yes, this is redundant, but my goal here is to have a decision about the market and also make sure that folks learn how to use HGSI. So this is something that we did several weeks ago, and I looked at this rising wedge here. And you know what? We're at the top of the wedge. Where do you think we're going if we're at the top of the wedge? I think it's natural to expect a small pullback here. Now, if we were to pull back to this line here, I'm talking about 1.2%. So that's not a big pullback. Just draw that officially. From where we closed, that would be 1% and 24 S&P points. That to me seems like a normal expectation. We've hit this before, and we do pull back. We'll see if we break out to new highs. So I think that that's clearly a risk. And as we work off this rising wedge. If I take a look at the Dow Jones Industrials, which are right in front of my face. It's just hard to see. Nice uptrend, 2 weekdays, weekly bongos intact, closing right on the 8-day exponential. I have no issue with the Dow Jones Industrial. I look at the NASDAQ, which is even stronger. Now, you start playing with trend lines. If I was using my trade station, my new program would be running them in automatically, but you can start looking at different lines and I like to draw these to see where we go. Is that a broadening top, a megaphone? Yeah, I don't. And we'll see what happens to it if it continues up. If it continues up, we got a little bit of a run here. But right now, the Nasdaq is also at the top of its channel. And again, I would think that the lower, the higher likelihood is to do that than to break out and break above. But we shall see. But again, kill this, kill this. A move down here would be 2.9%, but that 2.9 would be 185 NASDAQ points. It would hurt, but again, I think you could do that and still not kill the thesis that this market is still likely to go higher. One thing I can tell you for sure is if we do this, why aren't you being an arrow? That if we do this, that is so strange. If we do this, then I might be looking as for this. So, after a couple of good weeks, we're up at the top of the channel on both the NASDAQ and the E-minis. So a week for a pause, probably in the cards. Russell 2000 continues with a close in my box. I put this out last week looking for a move out of the box. And we've been playing around. We did close with a doji above the box and came right back into the box. This has been box bound since December. We already looked at the dollar, so you know what it's going to show you. But just to review, in HGSI, the dollar, whoops, I don't want that thing. Hold on a sec. Is down. Week. Now it's at the bottom of a trend line, so maybe this is a week it moves up. But the dollar has just been pummeled. The VIX continues down as low as it gets. The topping tails as it's unable to sustain an up move. And now where it's getting interesting is gold and silver. And yes, I think going into gold now, the weekly bongo turning green right up there, that's a positive. Close above the 50, that's a positive. Good volume coming in here, that's a positive. I think gold nibbling is fine. I'm not going to give it much. I mean, the most I would give it, a move down to the 50, the 200 rather, is about 1.5%, which would be 1.5, 2 points. I'm not going to give it much room below the 200. The dollar has just been struggling to get above. So you could actually probably come in here with that little box tool. We'll make it black and say that gold is living in a box. And right now we're in the middle and it looks like it wants to go higher. And silver, tough for me to get excited there, big downtrend. All right, if I look at industry groups, which is usually my next thing, and I look at which groups are leading, well, here's just the major sectors. And again, the same top-down review. Let's take a look at those. So the leading by this ranking is utilities, technology, and communications, which fits where I'm at, plus healthcare with biotech, which is down here, and I don't think they've broken out. I'll have to talk to George and get this redone with REIT separate, which is so. If we look at let's just look very quickly. Utilities, gosh, looks like leaders, doesn't it? Strong uptrend near the near the high. Nothing not to like about utilities here. Technology looks good. A couple of sideways days. Communications, nice lower left, upper right. Financials, trying to get above and stay above the 50. Notice the weekly bongo went green here, and it's green on communications and green on technology and green on utilities. That's a big deal. Consumer staples, sitting right on the 50, certainly weaker than the things we saw. Did go to green on the weekly bongo. Healthcare, a big leader here. Materials, discretionary, and industrials. So clearly the only things that look bad to me are energy and financials look good. Energy is the thing that looks the worst, and consumer staples. But for the most part, most of the sectors look good, which is what you'd expect after the market's been in a nice uptrend. Now, I did want to show you one thing here. This is called the group performance analysis, and I run this every night practically to see how my stocks are doing compared to others. And I know that when my stocks are underperforming, the types of stocks that I need to either get out of the market or change my strategies. So you could see last week that on the S&P 500 was up 0.54%. The most important thing to me is to see how the IBD 50 compared. It was up 0.73. So that tells me, or 0.83, that growth was outperforming. My Market Smith 250 was up 1.09. The HGS 100, which is similar in constitution, was up 1.2. The IBD 8585, which is the nightly review, I think it comes in Thursday or Friday, up 1.5. And then the part that, using one of my customers' comments, warms my cockles, whatever the heck cockles are my holdings were somewhere up here. And I had, as I said, I told you about 2%. Another great week on the types of stocks I buy, 2.09. Those are clearly growth doing better than the S&P as a whole. We'll come back to this later. So the next thing I look at is industries. Now, typically, I'll look at the number of stocks up on the 2-day or number of industry groups. It's 36. To the downside, it is 22. So pretty much balanced. To the downside are energy, steel, banks. As I told you, they were weak. Managed care, casinos. Those are the weak things. To the upside, we'll get there in a second, but the upside has biotech at the top. And if I look at the longer term, I've got 51 groups are still positive on 5-day EMA of force, and 33 are negative. So I would say this isn't an overly bullish or bearish picture, and one that's balanced. Let's look at a couple of them, and then I want to show you a couple of my shortcuts. If I right-click on exploration, you're going to see a lot of things that don't look great. Only 2 are above the index. Everything else is underperformed. Do you want to go long-range resources? Oh, we must be in the down. Hold on, my bad. No, you want to be short that. That's because we're on the downwise. Let's go up to 2-day down, 2-day up rather, and let's go back to the groups. So biotech's the leading group. Here's the index. These are all the biotech stocks that are outperforming the index. Let's take a look at a couple and see if anything is in a viable point or any of we've been talking about. Sarepta, small company, makes a muscular dystrophy drug. The drug's been quite controversial, especially in its approval. Loses money, but had earnings upside surprise, big move. I'm not chasing it. Vertex, Big move on a cystic fibrosis story. Tesaro on the selling block. Everybody thought Gilead could potentially buy them or Sanofi. Nothing's happened. The stock sold off. It might be trying to move. Celgene is probably my favorite of the group, and Celgene has had a very nice run here. And if you look at it on a long term, it's sort of a giant cup and handle, and is Celgene about to take off? Well, if it does, it's going to take the NASDAQ growth and biotech with it. This has been very strong of late. We called it out when it was coming up here. Gilead also is trying to reverse a long-standing downtrend. Tested here, moving higher. I like Gilead. Alexion, new management. Weekly. I'm sorry. Golf is tiring. You can see it's been in a world of hurt for a couple of years. But if I scrunch it, let's just look at monthly. And if you made it up on the way up, you'd still be pretty happy. But it's definitely in a tough time. They have new CEOs, perhaps that will right the ship. And it did break out here above the prior high. It's got a weekly bongo, might be worth a run. Next is Spark. Don't know anything about it, but breaking out of a, you could have put a sort of a box in this puppy too. Capturing most of the price movement in that box, and he broke out of the box. That's got to be very bullish. Don't know it's a he. Here's one that I'm playing, BioVeritiv. This is a spin out from Baxter. They make hemophilia products. It had a kahuna on Friday, and it's breaking out. Let me pull up the rest. Let me see how this looks here. Yeah, so it had a pocket pivot and a kahuna here. Here's the group strength, mobile breakout from a squeeze. I like BioVeritiv. Amgen, after a deep pullback, breaking out towards new highs. BioMarin sitting on its 200. Needs a lot of work to do, but big volume and a positive move it got on my list. I purchased this one early in the week. Don't know anything about what they make, but I like the chart pattern, especially this one here on Tuesday. A kahuna, big move off the 17. Anilin Pharmaceutical, another biotech stock, not as good as some of the others from a chart pattern, but maybe give it a day or two. So a lot of biotech stocks look interesting. I'm in several of them. Exelixis continues to go higher. It's at pretty much an all-time high. Kite's another one, waiting on a potential approval with their CAR-T next version immune oncology therapy. So a lot to like in biotech. Entertainment content, there's this potential deal involving Scripps. So Scripps had a huge run-up, as you could see here. I'm not playing that game. AMC. I might look a little bit at CBS if I had to build a list to look at further. Why? Uptrend, pullback, pretty deep pullback, now breaking above the moving averages with some pocket pivots, and the bongo's just gone green. And this is what I do. I go down these lists one at a time to see if I can find anything I like. Go down a couple of these. These are some utilities on the electrical energy, I believe. Avista. All right, why are you doing that to me? AVA, 2.7% dividend. Big gap up here, probably an M&A story. First Energy, been pulling back, broke above a descending 200-day moving average. Everything is green, pays a 4.5%. AEP, uptrend, pullback, about to break the 50 with a kahuna, pays a 3.4. Southern Company pays a 4.8. Not great chart patterns, but again, with interest rates falling, they may be expected to go higher. Telecom carriers, it was T-Mobile that had some great results, led it to pop. Some of these have great dividends. I don't know what I did here. T-Mobile had a big pop and drop here, trying to retake its 50. I would pass. Verizon down in the bottom here, long way to go. pays a 5.2% dividend. You know, AT&T, you don't buy these stocks in free fall for a 5.4% dividend, but when it stops falling, that's an attractive dividend. Now, I could go through all of those, but what I do for shortcuts is I go into tools, into group, inclusion report, and I can build some lists that are bullish and bearish. So the hypothesis here, the hypothesis is that HGSI has all these types of groups. And that if I loaded a selection of groups that are bullish, and then maybe I added to that list some of my favorite stocks, such as my consolidated buys and my Market Smith 250. And I say make group for rest, from rest, and I'm going to name this GIF webinar 7.23.2017, and this is bulls. And what it's going to do now is it's going to see what stocks show up on a lot of different lists, with the idea that if you show up on a lot of lists, then you might be a good stock. And it should open up in a second. So these are the stocks that made a high number of lists: E-Trade, NVIDIA, Vertex, Exelixis, Health Insurance In, MGM, Netflix, AAOI, Adobe, Baozun, Nutrisystems, S&P Global, Square, ASML, Celtine, and the list goes on. I do this as part of my nightly review. I also do this looking at bearish groups, and one can see on the bearish groups some financial and a lot of energy related. Bulls. It's a lot of energy. Lots of energy are on the bears. So I've looked at the group inclusion report. The other things I do as shortcuts is I go into the user groups, and I look under my name, for example, not user groups, smart groups, and I see a list of a number of scans. Let's look at pullback to the 50 moving day of the Kahuna. I hit warehouse, they pop it up here. Let's rank them by 2-day momentum, and let's see if anything here looks buyable very quickly. By definition, these are stocks that are above their 200. They pull back to the 50. They have a kahuna. PAH is an interesting cheap stock, specialty chemicals. I looked at this pocket pivot in a kahuna on Friday, but in a weekly bongo. Portland General Utility. W.R. Grace and Company, a specialty chemical. Notice, yes, it's in an uptrend. It's sitting within 1% of the 50 and had a kahuna. That's the criteria. Don't say I love it. Ida Corp, too loosey-goosey. PFF, I've never bought a ETF on preferred shares. It pays a 5.67% dividend. I can tell you on Market Smith, there's not a lot of movement in the stock price. You're doing it for the dividend, and notice that you've got an uptrend. You're sitting close to the 50. You had a pocket pivot kahuna. Excuse me. Ecolab, nice uptrend, pullback to the 50. Expensive stock with the kahuna. So I just use my scans to find the types of stocks that I'm looking for, and I lose some. Here's one that's interesting. Oh, it's another fund. Uptrend, pullback to the 50, global breakout, and a kahuna. So I showed you a number of ways that I find my stocks, whether it's top-down review, whether it's scans such as the pullback to the 50, and whether it's the group inclusion filter. I told you that I am cautiously bullish. I am based upon the indexes, but I do think that we should have a pullback coming this week. And I say that partly because there weren't that many great stocks to buy. Let's take a look at what I came back with my buy list. So wouldn't it surprise me if for for us to be flat on the week. If we're up a lot on the week, it's because there's been rotation. Speaking of rotation, let's look at some of the stocks that really did well this week before we say goodbye. Netflix, I already have a position. I've sold a call at about 190 or 195. I'm in at 140, which means I came back in here when it broke up above the 140 with a kahuna. But I wouldn't mind if I got taken out because it's a lot of money to buy those shares. And I can sell the call without buying them. Weekly bongo went green this week. Capital One, this is an interesting chart pattern. It's not a good uptrend. It's pulled back pretty deep, but it had a Bible gap up, pocket pivot, mobile breakout, pocket pivot, kahuna. Everything's green. I'm tempted to chase this one. Keep in mind that if I put my stop right about here, and if I buy it there, my stop's going to probably come down here around the 50. It's 4.7. It's $5.4. It's 5.4%. It's about $4.50. So there is a pretty deep space between the price I get it at and the stop. But I think Capital One goes higher. This stock I bought 2 weeks ago, breaking out over here. This was the time to originally bought it. I did. And then I got stopped out in here and I went back in and I'm happy I did. Bazun. Celgene we already looked at. AbbVie, another nice pattern. It's a little bit extended. You could see the high jump bar as the top as it goes. It did have a kahuna and a pocket pivot on Thursday on its breakout day. What I like about Celgene is it trades and acts like a biotech and pays a dividend of 3.4% like Big Pharma. No shocker, this was spun out of Big Pharma. Lumentum, it needs to break out probably above this point for me to get excited, but I'm excited by this. This is in the same space as AAOI and has good earnings per share coming according to daily graphs. It's been in a funk for a couple of weeks, but I think this thing is just getting set up to break out. We shall see. Discovery Financials kind of deep in the pattern. I own some biotechs, but I like to own LABU calls to play this. And LABU closed kind of under a closing high, but not much. LABU biotech poised to break out this week. This is a bottom fish. It looks to me like it's done going down. It had a PSAI reversal. I'm not sure I'm going to play it, but it's on my watch list. AAAP. I don't like buying falling knives, but I don't mind buying quality things at a discount. We talked about BioVeritiv. Skyworks earnings are out, so you have some of your risk is gone. Good earnings per share growth, twice the multiple. I think this goes higher, probably subject to Apple delay risk, but Skyworks has diversified. Great earnings per share growth, twice what the stock price reflects. I think these, and again, I should like my buy list. Here's one of the telecom carriers. I don't know anything about Zio. Does not pay a dividend, but it retook its 200 new bongo weekly, couple of pocket pivots, and a kahuna. Not a cheap stock, but what a pattern! What a pattern! What a pattern! I want to buy tight stocks that are lower left, upper right. I'm surprised that the weekly bongo's red, but here is General Dynamics, GD, very tight, at least from December on, lower left, upper right, kahuna on Friday. Looks like it wants to go higher. Nobody, not even I, are going to be buying a lot of shares of these, but trades only 1 million shares a day, though. What a beautiful pattern. It's just run a long ways and is expensive. Here's a technology play, IT services. I was mesmerized by its earnings per share growth, pays a small dividend. I like to buy IPOs when they set a new high. So if I look at this one, a break above 81, I might be interested here. In the words of Dan Fitzgerald, Dan Fitzpatrick, rather. Once I get above that line, everybody's a winner in the stock. On that note, I'm getting tired. You're getting tired of listening to me. I went through the list of some of my favorite stocks. Oh, I do want to look at AAOI. This is why I swing trade. This one is so easy. My son even trades it. I'm just kidding, but my son is a beginning trader, and he was so excited because a couple weeks ago we did one of these programs, and I said, buy AAOI. Why? Because you sell it at the top of the channel, you buy it on the bottom. You sell it at the top, you buy it on the bottom. And what do we have here on this day? I had a off the bottom, I had a PSA reversal, mobile breakout from a squeeze, and a kahuna. And we bought it on that day, and just a couple days later, they came out with an earnings raise pre-announcement, and the rest is good history. So that's what I do. I do make money. I hope you make money. I'd love to teach you how I make money and show you some tricks. And again, I really think the secret is not what I do, but what you do. And join me and let me help teach you to become your own guru. Again, Sunday, December 3rd. One day, dinner the night before, meals during the day, $400 if you're attending John's meeting, $500 if not. My contact information, hgsidoc@gmail.com. 3-day event here. For those who've emailed me already of their interest, please re-email me your confirmed interest, and I'll give you a PayPal account or an address to send a check. Payment is considered registration. Good night, everybody. Trade safe.